Our stock of the day is JB Hi-Fi. In fact, it's come up with an update there. It's saying sales growth has started to moderate from the first half, saying it saw a 0.8% growth in its Australian division in the third quarter. Sales in its New Zealand division up almost 11%, while its subsidiary, The Good Guys, reporting negative growth in sales, 3.8% lower. So interested to get your perspective on JB Hi-Fi and perhaps more broadly the retailers at the moment.
Yeah, it's a tricky time. A good friend of mine just posted on Facebook that his SMH subscription had gone up to what, Henry?
$20 a month.
And how much has your Prime gone up?
That's gone up 42% from $7 to $10.
So, and they're just two little data points, but pretty significant data points as well. So the consumer is well and truly under pressure, never mind, as we've just heard, 11 or 12 interest rate rises. I mean, we cast our mind back 12 months ago, the cash rate was 0.1%. Here we are today at 3.85, which doesn't sound like a lot relative to where it was in the past, but if you consider the debt burden that's out there, it is significantly higher. And as a consequence, you can see, therefore, that people are pulling their heads in. They are looking for the value buys, and that's really what JB Hi-Fi is saying, that, you know, their value offerings is sort of holding them up pretty well. But ultimately, from a retail, it's always been a tricky game. It's just getting harder and harder. And consumers are already getting bashed. I mean, what's the average New South Wales mortgage? About $800,000. So every 1% rise in New South Wales mortgages sees an extra $8,000 a year in after-tax income that has to be paid against their mortgage, and it's not being used to be JB Hi-Fi or Lavisa or whatever the case may be. So I just think being cautious on the consumer, but it will get to a point where it's overdone, and I don't think we're there yet. And, you know, we saw Brett Blundy come out yesterday making an offer for best and less. There is absolutely value out there, and the switched on guys and girls in retail can see it. But for us mere mortals in retail land, I would be quite cautious with consumer discretionary. I'd be probably continuing to focus on consumer staples. JB Hi-Fi, briefly, the result was okay. I note the shorting positions have started to increase again. They were one of the most heavily shorted companies back in 2019. That backed off right into sort of the beginning of this year, but I note the shorting positions are starting to rise there. So it's probably a hold, but it is a very well-run business.
Yeah. Okay. Henry?
Yes, I think I'd have to agree with my friend Andrew. Certainly, you know, JB Hi-Fi, if you're going to be in retail or discretionary spending, these guys are the good guys in the space, and they really do know how to run it, and they have done a pretty good job, I have to say. But obviously they're heading into some headwinds at the moment. Same store sales, easy for me to say. JB Hi-Fi slipped 0.1% in March quarter, and sales of the good guys in Australia fell by 3.8%. So that is clearly a sign that things are slowing down. You've only got to look at the retail numbers as well today to see that the big rise, I guess, if there is a rise in retail spending, has been in cafes, restaurants and takeaway food services. Food retailing is the only thing that seems to be going upwards. Clothing, footwear down. So it's not easy being a retailer. We're heading into those headwinds. Solid business, definitely a hold. 8% of this thing is actually shorted, so you have to be a little bit careful there. Surprised, to be honest, that we didn't see a bit of a knee-jerk reaction higher from some of those shorts covering on the back of those results, which weren't terrible. They were very solid. I think solid is going to be one of the watchwords of confession and bank reporting season. But yeah, for me, it is a hold. But retail is going to be tough, I think, going forward in the next 6 months.
Yeah, in fact, we heard from Philip Lowe last night just an explanation as to why they lifted rates there, and he certainly pointed to the services sector, hospitality as an example of where they're seeing that inflation continuing.
So he wants to kill all the sectors, doesn't he? He's not just content with slowing down some. He's really interested in killing all the sectors. Yet at the same time, we've got a government next week with a budget that is going to help us with the cost of living pressures.
Yeah, well, it just made their job harder, didn't it?
Yeah, it just made everybody's job harder.
Yeah, well, that's true.
Organise it.
Yeah. All right. Okay, well, let's